Okay, first up will be US dollar yen. I want to cover the charts that I've been working on. So maybe 4, maybe 5. Okay, no change to the monthly. We've had a strong up move this week, and I am looking for that to continue, although it remains under weekly resistance. Monthly idea is that the main idea is that it's a bullish triangle with D to be completed, E, and then a strong up move above 125. The alternative bullish scenario is that we're looking at a three-wave correction here beneath 124 and then a down move. Either way, I'm looking up right now. I don't see a bearish scenario. I will go over a few other things. The key here, we had a strong reversal week, but it remains underneath the trend line resistance, and that's an issue going forward. Who knows how it'll open on Monday? I keep having this persistent repeating idea that there will be some major gap in this pair, possibly gap up, well, preferably gap up. So that's it. The idea worked this week, although it missed the low by a few points. This has been happening in a few pairs recently. On the 4-hour, I was looking for a three-wave correction here. It failed to break the low here by a couple points, and then reversed up with a number of breakouts along the way. And it stops at that point once again, at weekly resistance going back to 2015. Now, a couple points I brought up this week is that we are dealing with the pair being essentially in between two correlations. One correlation is with the Nikkei, in that when the Nikkei rises, the yen sells off, and so this pair rises with the Nikkei in tandem. It's been following closely for the past 5 years. This has been a consistent binding one-way movement. However, you can see the divergence that basically cut off around October this last year, or at least since November. The upward move in Nikkei was strong, and US dollar yen did not follow. So that is one failure there, and I like the idea that it will make up for that in a quick burst up, or relatively quick burst up. So that correlation is not together at the moment. Now there's another one with gold. This negative correlation where gold rises, US dollar yen falls, US dollar yen rises, gold falls. This has been very tight all the way up until about 4 weeks ago, when gold has gone on a very strong rally, very strong over the past 4 weeks. And US dollar yen has gone sideways, and each dip has been bought. And as I mentioned to someone today on Twitter, each dip is getting smaller and smaller. So it may be winding up for that big move. But in any case, the negative correlation has not been working out for the past 4 weeks. So it's going to have to make up its mind in a way how it's going to do this. It's really, both correlations have fallen apart here. Is it going to go up and follow the Nikkei? Or is it going to go down, realign negatively with gold, and then the Nikkei will turn around and collapse? Because one of these is probably going to happen. My preferred view, I mean, no one knows what's going to happen, but my preferred view in this is that this will rise relatively quickly. If it's a triangle, okay, there will be some respite for E, and then a real thrust up. So I mean, in the second quarter of this year, if that idea works out, it should be running rampage up. The idea would be that it would realign with the Nikkei first, and then gold would either move lower or would just run on its own path for any number of months. Because at this stage, well, I'll talk about gold later perhaps. And then it would, with the bigger bearish idea, turn around and just plummet. That's my preferred view, and that's still the one I think most likely on here. But if you're a fan of correlations, you then have this pair running between the two and not knowing which way to go. And we can take guesses about it, but it's going to realign with one of them and then preferably with both later. But in any case, it's in the middle of nowhere now. Like I said today, this pair does not have the great risk-reward, the great edge that Euro New Zealand or US Canadian had last year, those trades that I followed, which were the two best ones I had last year. What was I going to say about this? Yeah, each dip is getting smaller. I mean, as you can see, unless something changed, original, smaller, smaller, smaller. So that's one thing I wanted to say. The other is, if you are a traditional chartist and you are a fan like, what's his name, Peter Brandt? Yeah. If you like head and shoulder patterns, or you like inverted head and shoulder patterns, you've got one here for an inverted head and shoulder, I think. Right shoulder, head, left shoulder, well, you know. And then a move up. And the measurement on this move, basically, I haven't done this in a long time. I think that's the right way to measure it. It's from the origin to the head, I believe, and a break at the neckline. We're talking about a move to 126. I think that's the way I've forgotten how to properly measure these out, but I think that's correct. But in any case, I'm bullish between 118 to 124 as a minimum, preferably above 125, which is here, above the 2015 high. So that is one bullish view to take. So short term, well, it's under, this is the weekly resistance, this is the daily resistance, it's underneath both of those. It fails and fails and fails. Maybe it'll need the gap up. I really like this idea of the gap. If you want to talk about a bearish view, I do not have a big bearish view, but yes, it is possible that this ends up making a deeper decline still to 110.83, which is a small possible gap here. Though I don't think this will happen, but it could. You can see every dip's being bought. Every bloody dip's being bought. So I'm staying on the long side, and I'm going to look for this to move up. And if there's a gap or something, I'll look for it to continue. The idea on the D completion is that we've only had A and B, and we're looking now for D towards 116, 117, beneath this high here, beneath that high, E, and then the big move for the triangle. So that's US dollar yen at the breaking point between correlations and ready for surprises. Well, you know the North Korean thing keeps lingering, so that may be impactful. Okay, this sold off today. The Canadian dollar was strong this afternoon on fantastic employment data. However, this is probably the best five-wave advance. Well, this is the best five-wave advance I have right now. I think I went over this 2 weeks ago in the last video. Clear five-wave advance here. Three-wave correction. I was wondering if the truncation this week was going to work out. It advanced, retreated, and plummeted today, but the bounce from the low after post-news has been very strong. And I'm looking for this to terminate. Will it make another low? Probably not. But if it does retrace, well, we'll see. If we get a brief retracement like this, and it doesn't look weak, there'll be a buy setup there, even if it's sideways. You could see a further low in this. But keep in mind, everything's kind of been in threes so far. Threes, threes, three. This could just stay as three. Okay, so it might not make that new low. So I'm going to look for a sideways move on Monday and Tuesday and a chance to buy. The idea is a move above 98, well, this high here from 19 December. That's been a good over 50% retracement from the low today. And on the weekly, what's important for me, as I use it a lot, what's beneficial, is that the weekly price is closing above the 8 EMA. I think some of you guys know what this means to me. Even though it's actually, the 8 EMA on all time frames is really only important in trending markets. It's not such a big deal in sideways markets, but because of the 5-wave advance here, I think it's important that the 8 EMA is starting to try to establish itself as a supportive base. So on Monday, I'll be looking to buy this on sideways action for a move up above 98.80. And in the long term, the idea is that we had a 3-wave move down here. And I'll be looking for this to move up. How high? Honestly, I don't know how high at this stage. I think on the monthly, we can look for a move back up toward 102. I don't see why not. There are a couple ways to look at this. If I take this literally on the monthly as a literal reading, we're looking at a 3-wave correction into here. That's a new low, so I'm going to take that as 3. So 3 up, 3 down, and now we would see some kind of other 3 or a 5 or some kind of advance, right? Up here. So I'm going to look towards 102 with a further target of 107 above the January 2012 high. So I think this is offering the best vantage point, edge, probability, maneuver, grasp, pull, chance at this stage. Aussie New Zealand, I tried to get the low in this week. It was kind of wedging up. I maneuvered around, shaped around this wedge for a while. I was looking for 110 to hold. And it's broken through there. I'm going to eliminate that. On the weekly, I was trying to work this wedge idea on the weekly. I still like the move up. It's a question if we see a new low now. If not, I mean, this can be adjusted. It's not a big deal. I mean, if there is a new low, we're looking at something like this to make a 3-wave move and then a bigger advance. I'm still looking for a new high on this. The monthly stochastics are holding up. Stochastics are pretty useful most of the time. And it's simply doing a correction of that. I would look for this to hold, and I'm going to look for a move up above 112. So it's a matter of finding the low if it makes a new low, because there's still a possibility it will not make a new low. We need to see and find out. I mean, it is rolling over here, so it may be more likely to make a new low. But the key here is that if it does make that new low, there's going to be a very good chance to see up above 114, because the idea remains for a high on this awkward choppy pair above July 2015. So there's a trade to be had here, and if you can grasp it at an advantageous spot, there's a big move to come, I think, from, say, 110, 109, something maybe, if it makes a new low, 108 and change, up towards 114. Like a really big move to follow. That will probably take a good deal of time. Well, it depends on I mean, you can see that the ascents here, all of the rising thrusts, they're all pretty violent. This pair moves when it moves. It moves strongly in both directions, actually. But the reason I say maybe it'll take a bit of time is if there's a sideways motion in between. You see, like, fast, slow and choppy, fast. It's that middle bit. Okay, that's not a good example, but there's a bit of a weight here. But in any case, there's a trade to be had here, either 109, 110, 108. for that move up. I'm going to use that as a breakout point now, because the last one, unfortunately, did not work. Resistance was not, support was not found. So let's see how this develops. The monthly is trending up and the weekly is trending down. The next week, the stocks will be closer to 20. 20 is the target on this move, so maybe we see a bit of a dip. It does not have to make a new low, because it may be enough just that there's already a 3 here, and we have a kind of wedgy pattern here, and if it can hold the low, I'll look for a move up there. I don't know what's going to happen there, but I am confident about the further up move above 114. So it's a matter of finding a low in this. Okay, what's next? Euro pound, 5 weeks of chop and muck, as you can see right here. No one wants to marry that. Okay, on the finally, we may be getting something. It's not the largest, it's not the most confident candle, but it is posing the possibility of closing in an hour or two, of setting up a red shooting star. So I'm going to look for a sell-off next week. I've been waiting for this one too. I mean, you can see how this has basically been going. I would look at it like this. You can see there's no, that flat idea I was working before. First of all, I'm bearish on this if you don't know. Secondly, the flat idea, I was proposing a possible flat idea with 3 to here, 3 to here, and then a 5-wave move to here or to here or to here or to here, and then the down move. But that's not working because this shape and the movement here is not 5 waves. It's not characteristic of an impulsive wave. So it's looking like it wants to at some point keel over and die. It's just a question of how that initiates on the lower time frame. Well, that's just 3 waves so far. There's nothing for me to say about that. I'll be looking for some kind of weak candle, some hanging man, some kind of shooting star, some engulfing that'll suggest a further downward leg, and then maybe that can develop into something like a leading wedge or whatever. But I'm going to see next week if we get this good close in an hour or two, if it can start that move down. So going on to another euro pair. The move I like in this, the idea that I like rather, I do think now that it has failed to sell off here. The upside is still favored. It's a question of, well, I think first of all, this broken trend line is going to hold. And the idea I proposed, I don't know if it was in this video or just online, is that we may be looking at a wedge. It's only 3 waves here. And in my opinion, there's no question that this is a 3-wave move. For me, it is. For someone else, maybe there may be no question that it's a 5-wave move, but for me, it can only be a 3. And overall, I'm looking then as a 3-wave move right here. So what I had in mind is a possible wedge, ending diagonal, terminating wedge. It may triangulate, may do something else, I don't know. But the idea on the wedge is A, B, C, D, E, and then over. And that would make a kind of wedging pattern like that. Now that is going, if it does turn into a wedge, it would probably take, well, I would guess it would take through May of 2018, maybe June even. Because I mean, we would need a few weeks down, a few more weeks up, did sideways down, and then up for the 5th part. So we're looking at, if that's correct, that's the main idea I have at this stage because of the 3 here. We're looking at a 4 to 5 month, maybe 6 month period of chop up and down, preferring up still. Another possibility, just to keep in mind, is that it was 3 waves down here, obviously. So far only 3 up here. And maybe it puts in a kind of like flat situation here, but I don't, and then turns higher. But I don't really think so. I think we're going to be looking at a weaker euro. A wedge would bring us nicely into about 123 or so. So let's see what happens there. But I think I am looking for the euro to turn lower later this year, euro pound too, and to see a bigger bearish move. Now the key would be, I mean, this would look much better with a new, I'm not sure, just 1 second, if it made a high there, 20924. 20888. So no, it did not make a new high, but the idea, it would look better with a new high. And that would give us 5 waves here to suggest that the low in, was it January or December here? In January 2017 is a major low. This is the dollar index. If we see a new low sub September's price, underneath September, I will be counting that as a clear 5 wave move. 1, 2, 3, 4, 5. I like the idea of the wedge here. Divergence, get 5 waves, and the idea would be essentially to find on a new low, 5 waves here, get some kind of big correction, impressive correction, as you get sometimes with wave 2s, that's quite deep and impressive, and people think it's going to make a new high, and then it does the spectacular, or rather disastrous thing, and just falls off the edge of the chart. That would make a new low here, and then the initiation of correction and follow through of it would mark January 2017 as a long-term high. And although nothing's guaranteed with charts, as they're merely suggestive of different possibilities, it would favor the idea that that's a long-term high of the beginning of a major bearish move down to follow. This has taken 12 months. If it's a wedge, for example, it would take another 3, 4, or 5 maybe. So we're talking about a year and 5 months, let's say, overall. Corrections tend to be a bit longer unless there's some kind of like ABC with C being violent, but forget it. Corrections tend to be longer. So we'll be looking at probably a year and a half correction. So looking into 2019, 2020 for the start of a really deadly move. But the idea would be, sorry, I'm getting long-winded here. The idea would be that if we see a new low, a very, very strong move up in the US dollar would follow. That would see euro fall, that would finally see cable fall, and then we would talk about later the idea that this would stall out and would be sold into, and the dollar would be disastrously dumped. But the new low will be important here because the new low will give it what a lot of professional traders will look at as a decisive bearish print. Yeah, so to summarize with euro US dollar, I'm looking for higher in this. How it unfolds, let's see, but I'm looking from lower from here. I'm not sure if the high's in, I can't say that, but I am looking, if it's a wedge idea, I will be looking for some kind of decline and then another move up. Not that deep maybe, but you know, like a wedge. Okay, pound US dollar, cable, not much to say. Actually, I don't have anything to say about this. Chop your ass up. Okay, so hold on. Euro, cable, dollar, yen, euro, pound, Aussie, New Zealand, Aussie, Canadian. Aussie US dollar has been exceptionally strong. No idea. New Zealand US dollar, not looking at it. This was certainly a trap. This was, I could see this coming. This was sure to be a trap. This broken trend line and this move back above it. I saw this last year somewhere, I can't remember, but these traps happen a lot. I don't know what's going to happen on this overall. Something like that, maybe. I'm not going to entertain the idea. I mean, I'm not going to entertain the idea that, okay, it's made three waves to a new high. Okay, now it's made 3 waves down. 3 waves down. Correcting. I'm not going to entertain the idea that it's made some kind of like, okay, move to here. This is its own 3-wave thing, and now we've got a higher. No, I don't think so. I think that this is a 3-wave move of its own, and that this is a 3-wave move of its own, and we're looking at a corrective move, and this is going to continue down, but not in a 5-wave sequence move. Yeah. In any case, I'm not looking to do anything with this. I just got sidetracked on it. Maybe I should mention something about gold. You know, the negative correlation with US dollar yen has died off. This has been exceptionally strong from that low. I don't think there's any reason to be bearish on this. I think I said in the video 2 weeks ago that I don't feel good about this being bearish on this, even though I was trying to run a counter negatively correlated idea of a bearish triangle. And it's still possible, but the upswing from there has been so strong that I'm probably going to wipe that. So I would not look to be bearish on this. So I think US dollar yen and this will be split for a while. So actually nothing to say about that. Okay, I'll leave it there. For me, the pairs are Aussie Canadian as the principal pair right now, if we can find that low. Aussie New Zealand, a low I feel is coming. Euro pound may start to initiate that move I've been looking for. US dollar yen is the enigma, though the upside is favored, and dips are, as you can see, worth buying on every shorter one. And Euro US dollar, if you can give a signal on the 4-hour or so that it's not going to make a new high, there may be a sell setup there in the first few days of next week. Just to mention one more thing about Euro US dollar, on the daily, I suppose if you're bullish on this as a 5-wave move, I suppose you would have to count this as the 3rd wave. You'll be looking at 1, 2, 1, 2, 3, 4, 5 maybe. Sideways 4, not intersecting, and a new move up above, and then maybe you would actually have 5 waves. And if we see that, and if it becomes evident that the wedge idea that I propose is not going to materialize, and we just see something like we see a proper 5-wave move, then into that trend line resistance on the monthly, then it will be easier to be bearish on that quicker. But for now, I'm looking for it to slow down, reverse, and have a few weeks of downward movement. Okay, have a nice weekend. Bye-bye.